Talk a little bit about the commercial real estate like asset class and where it's at right now. You mentioned interest rates. In theory, on paper, this should go higher eventually. How much higher is anyone's guess. But where does the market stand right now? As we've sort of we have reopened. We're coming out of the pandemic here. It was a pretty scary. Imagine your spring of last year professionally was quite terrifying. But as we come out of that. Where's the marketplace right now?
Yeah, so stepping back before COVID and looking at sort of the last 3 years, cap rates or capitalization rates, which is sort of a 1-year yield on your NOI
Right.
or net operating income, have been compressing. They've been coming down. Why is that? Well, we've got cheap money out there. Keep buying and buying. And cap rates came. When COVID hit, you're right. It was a really interesting time, and I drew the parallel to the Lehman crisis or the debt crisis of 08, 09. That was leverage induced, and so if you had too much leverage, you were going to get pinched. Here, it wasn't leverage induced, and we weren't sure when we go into. You think about what commercial real estate does. It takes a business and its customers, either their employees or their tenants, and they allow them to physically co-locate under one roof. But when you have a government entity that isn't related to that economic cycle, say you can't stay in this building, you can't use this building, then you're like, as a tenant or as a landlord, you're like, well, what's this worth, right? How am I going to collect my rent if I can't use my building, right? And so there was this period of time where we're like, this is interesting. At the same time, you saw PPP loans going out crazy, and all the banks were like, we're not going to worry about your mortgages right now. We're going to go put out some of this government funding. So you saw the capital markets freeze for about a 4-month period of time. We were lucky. We collected every dollar of every rent that we wanted over the year. So we were good in that regard. And we were pleased with that. But it was a dark time, and you couldn't see through the fog. Coming out of it, though, as soon as the market sort of thawed back out, and we've seen a lot of this if you look at publicly traded REITs, they fell off as much as 50%, and now they've largely rebounded, not completely. And you've also seen this in the real estate markets, that cap rates have come back to marching back downwards. We're seeing some cap rates get so low that it's just not sustainable, that trend, right? So if you're buying now, you should be very cautious and you should underwrite. That said, if you're thorough with your underwriting, if you're really looking at it, you're digging deep, you can find opportunities. Example, about 2 months ago, an off-market deal, we bought a Raising Cane's. So Raising Cane's, for those who don't know, is it's a pretty good chicken franchise. My daughters like it. I'm not a big fan of it, but anyway, we bought one in San Antonio, right next to a hospital, right next to a high school, right? So lots of people are always going to be eating it, and we bought it off-market, and we bought it probably 50 basis points cap rate wider than you could have bought it in the regular public market. So there are deals that you can find, but you got to work at it.